one space that is in focus is the pharma space. And, India is offering zero tariffs on pharma imports essentially. But, Varsha, talk us through what's been the key update today, because it's been a lot of news flow around the pharma space. What can you tell us, and in terms of impact also, what should we watch out for?
Yes, so basically, Puneet, there are two news flows when it comes to Indian pharmaceutical sector. Now, first is that India has proposed zero tariffs on import from the US for pharmaceutical products, but up to a certain quantity, and tariff beyond this quantity will be, so if imports of the goods exceed the agreed upon quantity, they would be subject to regular import duties. But the highlighting factor over here, why pharma sector is down today, there are three reasons why pharma sector is down today. Let's focus on that. One is Trump's commentary, where he's saying that he'll be announcing pharma tariffs over the next 2 weeks, and they're holding a conference next week, and he's also going to Saudi, Qatar, for all the discussion. So one key reason why pharma is down. The other is the president has actually signed an executive order to encourage medical manufacturing in the United States and reduce dependence when it comes to foreign producers. So the second key reason why pharma is down. And the third one is the FDA commissioner has said the agency plans to begin surprise inspection of the overseas plant to align oversight with US standards. So this is the third key reason why pharma is down today, because if the surprise inspection would be there, it is actually negative when it comes to Indian pharmaceutical facilities. Now, which stocks will be in focus? You have Gland Pharma, Aurobindo Pharma, Dr. Reddy's and Zydus Life Sciences, which has US exposure ranging from 45% to 50%. Then you have Lupin, Glenmark, Sun Pharma, which has a US exposure ranging from 30 to 38%, and the Torrent Pharma is the only one which has a least US exposure of only 9%. So these are the stocks which will be in focus. But Sneha, pharma sector is down on the back of Trump announcing the tariff when it comes in next 15 days. So how are you? What are your picks here? Would you advise investors to stay away from the sector itself, considering at least for the next 15 days?
Very good afternoon. Yes, we are currently on a very cautious mode with regards to pharma sector, and we are on a sideline. So we are really not recommending. If people are holding it in their portfolio, then if it's a few large cap names, then probably we're suggesting them to hold on. Otherwise, fresh investments, we are currently not suggesting anyone until we get a clarity on the same.
Got the view, Sneha. But another stock in focus is Cummins India. After it's come under scrutiny as the parent Cummins Inc., Q1 earnings revealed that 11% drop in India's power gen revenues, and has also withdrawn the guidance amid the tariff tantrum. Now, Anushi joins us with more details on this. Anushi.
Right, so we are seeing Cummins India under pressure. This is after Cummins Inc., the parent company, reported its Q1 2025 earnings. So why is this stock particularly in pressure? Firstly, now if you look at power gen revenues, which emit from India division, they were down around 11% in a dollar basis. So that translates about a 7 to 8% of a downtick in terms of where INR is concerned. On the other side, analysts were expecting a 10% of a growth in this segment. So weakness in India power gen sales were mainly attributed to the pre-buying effect that took place last year. So while the management did say that they do not see any effect of demand leading to this kind of a downtick in revenue, it's more of a base effect which is playing into this overall downtick that we are looking at. So that is something that should be focused on. However, the main focal point of these earnings that we are looking from the parent side is its withdrawal of its 2025 guidance on basis of tariff uncertainties which are taking place. So currently they're not providing any outlook for where the revenue or profitability is due to the global uncertainties which are building in, and believe outlook for remainder of the year remains unclear and will only reinstate forecast once the conditions will follow. If you just go back to a previous quarter and see the 2025 guidance, they had earlier guided for a revenue growth of -2%. So they were looking at a degrowth of -2% to a 3% of a positive growth. So that was where the revenue was concerned. While EBITDA margins were expected to be in the range of 16.2 to 17.2% of range. Just quickly walking through the Cummins Global Q1 2025 earnings, net sales are down around 3%. Sales in North America were down about 1%, and international revenues were down 5% due to lower demand emitting from Latin America and Asia Pacific region. So it's the effect of this 2025 withdrawal of the guidance that we are looking at, along with power gen segment downtick in this particular segment, is why we are looking at pressure for Cummins India in stock today, trade today.